I want to bring in Ivana Delevska, Spear Invest founder, CIO. Were you doing your little happy dance with the robot stuff? This is a robotic supply chain site I found. This is phenomenal. I love it. I didn't realize 162 companies, 104 public, 58 private, 8 layers, 51 subcategories. That's saying, when I hear all of that, it sounds like money, 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 money. Talk to us about where this is right now.
Well, Charles, we're in the very early innings of the robotics trade. We've been talking about agentic AI. That's where the big dollars are going in today. But the next trade will be robots. The question is going to be, when will they come? And from market perspective, I think it's going to look like very similar to the automotive market. So you're going to make a lot of money on the supplier side. I think that's going to be the money maker, and that's where people should be focused on. I think the robotics companies themselves, it's going to be a pretty fragmented market initially, and then we'll likely consolidate to 1 or 2 winners. But the suppliers will benefit no matter what. So that's where we are looking for.
And that's, again, to your point, there used to be 100 automobile companies, and eventually were 3. But throughout that whole period, the suppliers made a whole lot of money. I think I read somewhere going from $3 billion to $200 billion over the next, like, maybe 6-7 years. This is all part also, of course, of what they call physical AI. So we talk so much about the Gen AI, reasoning, agentic, and now physical AI. Just the impact beyond, this is going to impact a lot of the names that we already talk about, right?
Absolutely. So the hardware suppliers are going to be basically the same. The mix will shift from one to the other. So, for example, the Gen AI era was the model training era. This is where you needed a lot of GPUs. That was the biggest bucket of spend. In the agentic AI era, we're spending a lot on CPUs, memory, and networking. And then physical AI will go kind of back to the big GPUs spending, because what's happening is with robots is that they need to be trained. So you're going to need a lot more training than what we needed just from getting like search results.
No wonder Jensen's pounding the table.
That's right.
Hey, let's talk about a huge news item today. Meta this morning say, hey, we've got some spare capacity, I guess, compute. We're going to get in that. We're going to use cloud to do it. Already, folks have maybe anticipated this. Wells Fargo put out a beautiful chart talking about the opportunity here. How big is it?
Well, it's a pretty big opportunity for Meta because they do have this underutilized compute, and people weren't quite appreciating that part of the story, which is why the stock is up. I think if they really want to make a game-changing move here, they need to figure out how to use this compute, right? So that's basically the pushback, that they haven't really kept up with innovation with the Anthropics and the OpenAIs of the world. So the question is, why do you have this excess compute? So I think it's still a positive, but not as big as... It
could be. Well, I mean, listen, it seems like they are grasping for straws, and maybe these are some of the things that helps out, that will help investors, because I know a lot of people, myself included, are stuck in this stock. I want to talk about a couple of names that you like. You kind of alluded, I think, maybe to them, the semi-cap names, and Lam Research and KLA Tencor. You still like these names?
That's right. So this is one of our favorite areas to get exposure to the memory trade and the CPU trade, because these are companies that provide the equipment that will help add capacity both for memory and CPUs. And we think that while memory and CPUs are already in the 2nd or 3rd year in the cycle, this cycle just inflected last year. So you're a little earlier in this trade compared to
stocks,
memory.
I'm telling you, almost every week, a couple of sessions a week, they're in the top 10 percentage gainers, and they're just sort of doing it right under the radar. I want to, before I let you go, switch to software, which is acting better today. It's interesting because the cybersecurity to software, they've just crushed it. It's been that niche of software that's done extraordinarily well. They've shaken off AI jitters. And you say there's a name here that you like a lot, NET.
So yes, we really like Cloudflare, but Charles, to back up here, cybersecurity is significantly better positioned than the rest of the software space because they play in a niche that will never get displaced. So you're not going to do your own cybersecurity. So
when you hear about Mythos and all these kind of things, because initially those stocks did go down on that kind of news.
Exactly, and that was really the entry point, right? Because they very quickly partnered with the likes of Cloudflare to solve the cybersecurity challenges. So basically, Cloudflare today, most of the traffic on the web just surpassed to where robots are bigger than humans. And this is really their sweet spots. They basically provide the DDoS protection, but also a lot of other cybersecurity tools on top of that. So this is one of our favorite plays. But cybersecurity as a sector, I think, has been overlooked this year, and it's time to look for more opportunities there as well.
It's looking absolutely phenomenal, and according to the charts, though. Ivana, thank you so much. Always appreciate you.